Good morning. I'm Peter Martin. I'm Chairman of EML, and I will be chairing the meeting today. Before we begin, I'd like to acknowledge the traditional custodians of the land on which we meet, the Gadigal people of the Eora Nation, to whom I pay my respects to their elders past, present and emerging. The meeting today has been convened in accordance with the provisions of the Corporations Act. As I mentioned, it's 10 o'clock. I confirm a quorum of shareholders is present and declare the meeting open. Welcome you to the company's 2019 AGM, and I'd like to take the opportunity to introduce my fellow directors joining us here today. First of all, Tom Cregan, whom you all know, the Managing Director and CEO. Tony Adcock, Independent Non-Exec Director and Chair of the Audit and Risk Committee. David Liddy, Independent Non-Exec Director. Melanie Wilson, Independent Non-Executive Director and Chair of the Investment Committee. And Dr. Kirsten Ferguson, Independent Non-Executive Director and Chair of the Rem and Noms Committee. I'd also like to introduce Paul Wenk, who's Group General Counsel and Company Secretary, and David Rogers of Deloitte, the company's current auditor, who's also present. Before we move to the formal part of the meeting, I'd like to say a few very short words about the year we've had, the exciting acquisition that we announced on Monday, and the fantastic team that we have at EML. There's been a lot of headlines during 2019. Some of them include 7 years of continuous strong growth for the company, which is a really incredible achievement considering where we began. The growth's come organically, which is a testament to the efforts of our employees, and also through acquisitions, where Tom and the management team have worked incredibly hard to identify the right acquisitions and then execute them. During fiscal year 19, we welcomed 2 new businesses into the EML fold. First, Perfect Card, our Irish-based subsidiary, which holds our European e-money licence, and secondly, FlexiCard, also based in the UK, in Newcastle on Tyne, which has customers throughout Europe and also in the United Arab Emirates. Just a note, in Australia we grew the business organically, and one major new client was Smart Group in the salary packaging space, who signed an 8-year contract. I'd like to touch very briefly on the acquisition we announced on Monday, which is particularly significant. It's a transformational acquisition for EML. The details are in the investor presentation, and there's a lot of them, but I just make a few simple observations. Prepaid financial services is really a wonderful opportunity for us. It adds strength to our GPR business. In fact, it makes our GPR business the biggest part of EML, and provides us with the ability to provide banking or digital banking to the financial technology sector in around the world. Like EML, PFS has a history of innovation and very strong growth. The company has very strong relationships, particularly across Europe, and we think it's going to give us a great platform for future growth. We've released the investor presentation to the ASX, and I'd recommend it to you for more information about the transaction, and obviously Tom will be talking further about PFS in his presentation after the meeting. Finally, I'd like to say thank you to the entire EML team. People are really critical, an integral part of the business, and the culture and commitment to our goals and vision is first rate. The team at EML, including those we've welcomed during the year, have continued to outperform, and on behalf of the entire board, I'd like to say thanks to all of them. We'll now move to the formal part of today's proceedings. The minutes of the previous annual general meeting of the company, which was held on 14th of November 2019, were approved by the board and signed by myself, the chair of that meeting in accordance with the Corporations Act. These are tabled and there is a copy of those minutes available for inspection should any member wish to see them. The notice convening this meeting was dated 8th of October 2019 and was sent to all shareholders of the company at that time. Unless there are any objections, I will take the notice of meeting as read. Okay, the format of today's meeting. We have 7 items on the agenda today for shareholders to consider. 6 of these are in the form of resolutions. The resolutions will be placed on the screen. During the formal part of the meeting, I ask that you please restrict your questions to matters concerning the resolutions. Following the conclusion of the formal business of the meeting, as I mentioned, Tom will make a presentation and then shareholders will be given an opportunity to ask any questions of the board, the CEO or the management team. Valid proxies have been received representing over 111 million shares, which equate to 43.65% of the voting shares. The proxies for each individual resolution will be displayed on the screen as we go through the list of resolutions. All votes directed to the chairman, directed to me, will be voted in favour of the resolutions. The voting procedures. Upon registering your attendance at the meeting, you will have been handed a registration card by a representative from the company's share registry. Only those shareholders with a yellow card can vote in the items of business put to the meeting. Those shareholders with a blue card can ask questions but can't vote. As a reminder, visitors holding a red card are not eligible to vote or speak at the meeting. I've determined that a poll shall be conducted for all resolutions being put to shareholders at this meeting. For efficiency, I'll put all the resolutions to the meeting, advise the proxy voting results for each, and provide shareholders with an opportunity to ask questions. I'll then ask all the shareholders with a yellow voting slip to follow the instructions on the paper and vote on all 6 resolutions. I've nominated Kirsten O'Hara of Link Market Services to act as your returning officer for today's meeting. Once you've completed your voting slip, please hand it to Kirsten for processing. While the votes are being calculated, management will provide the meeting with a presentation. We'll take questions from the floor before determining the outcome of the poll votes. Are there any questions on the proposed format of today's meeting? The first item of business of today's meeting deals with the presentation of the annual financial report of the company for the financial period of 30th of June 2019, together with a declaration of the directors' report, the remuneration report and the auditor's report. No resolution is required to be moved in respect of this item. However, shareholders are now invited to ask questions and make comments on the accounts and on the business, the operations and management of the company. Shareholders may also ask the company's auditor, David Rogers of Deloitte Touche Tohmatsu, questions relevant to the conduct of the audit, the preparation and contents of the independent audit report, the accounting policies adopted by the company in relation to the preparation of the accounts, and the independence of the auditor in relation to the conduct of the audit. So are there any questions either of the auditor or the management or the board for that matter? If there are no questions, I'll move to the resolutions to be... Oh.
I was just going to say the share price is 4.30. We'll take that as a statement.
There you go, that's added value. If there are no questions or comments, I'll move to the resolutions to be considered at today's meeting. Resolution 1, Directors' Remuneration Report. Resolution 1 deals with the remuneration report. I put to the meeting that shareholders consider, and if in favour, to pass the following advisory resolution under section 250R(2) of the Corporations Act, that remuneration report for the financial year ended 30th of June 2019 be adopted. Proxy votes received in respect to this resolution are displayed on the screen. Are there any questions on the resolution? If there are no further questions, I will move to the next resolution. Now I'll have to pass the microphone to David Liddy because the next one is re-election of a director, which is myself.
Thanks very much, Peter. Before I put the resolution to the meeting, I'd just like to say what value Peter adds to this board as chairman, to the management team generally. Works exceptionally well with Tom, our CEO, and adds a tremendous amount of business value and understanding of the markets in which we deal in, and he's been a great leader of the board. So I put to the meeting that shareholders consider it, and if in favour, to pass the following resolution as an ordinary resolution, that Peter Martin, who retires from office under Rule 3.6C of the Constitution and Listing Rule 14.5, and being eligible to be re-elected as a director. Proxy votes received in respect of this resolution are displayed on the screen, and we know the 0.23 that have voted against Peter. Mr. Martin will not vote on this matter. So are there any questions on this resolution? If there are no questions, I'll stand down as acting chair and Mr. Martin will resume the role as chair. Congratulations, Peter.
Thanks, David. You've earned that cup of coffee. Resolution 3, increase in non-executive directors' fee pool. Resolution 3 deals with the increase in the non-executive directors' fee pool. Put to the meeting that shareholders consider, and if in favour, to pass the following resolution as an ordinary resolution. That for the purposes of Listing Rule 10.17 and Rule 10.2 of the Constitution, the maximum aggregate annual directors' fees that may be paid by the company to the non-executive directors be increased from $750,000 per annum to $1.25 million per annum. Proxy votes received in respect of this resolution are displayed on the screen. Are there any questions on the resolution? Thank you. I'll move on to Resolution 4, grant of short-term incentive options to Chief Executive Officer and Managing Director. Resolution 4 deals with the approval to grant short-term incentive options to the Chief Executive Officer and Managing Director, Tom Cregan. I put to the meeting that shareholders consider, and if in favour, to pass the following resolution as an ordinary resolution. That for the purpose of Listing Rule 10.14 and all other purposes, shareholders approve the grant of 185,994 options to Mr. Cregan, the Chief Executive Officer and Managing Director of the company, as the short-term component of Mr. Cregan's remuneration for the financial year ended 30th of June 2019 under the plan, on the terms set out in the explanatory memorandum. Proxy votes received in respect to this resolution are displayed on the screen. Are there any questions on the resolution? If there are no questions, I'll move on to the next resolution. Resolution 5, grant of long-term incentive options to the Chief Executive Officer and Managing Director. Resolution 5 deals with the approval to grant long-term incentive options to the Chief Executive Officer and Managing Director. I put to the meeting that shareholders consider, and if in favour, to pass the following resolution as an ordinary resolution. That for the purposes of the Listing Rule 10.14 and all other purposes, shareholders approve the grant of 226,481 options to Mr. Tom Cregan, the Chief Executive Officer and Managing Director of the company, as the long-term incentive component of his remuneration for the financial year ended 30th of June 2020 under the company's equity incentive plan on the terms set out in the explanatory memorandum. Proxy votes received in respect to this resolution are displayed on the screen. Are there any questions on the resolution? If there are no questions, I'll move on to the final resolution. This is an amendment to the company's constitution. Resolution 6 deals with the approval to amend the company's constitution. I put to the meeting that shareholders consider, and if in favour, to pass the following resolution as a special resolution. With effect from the end of the meeting in relation to any dividend determined on or after the date of the meeting, Rule 28.9 of the Constitution be deleted and replaced with the method of payment as set out in the notice of meeting and explanatory memorandum. Proxy votes received in respect of this resolution are displayed on the screen. Are there any questions on the resolution? If there are no questions, I'll move to the poll. With that being the final resolution to be put to the meeting, I'll now open the poll and ask all shareholders and proxy holders who are entitled to vote at today's meeting to complete your voting card and hand it to Kirsten O'Hara from Link Market Services. And we'll give you a few minutes to do that. Is there anyone who is yet to provide Kirsten with a completed voting card? It may take up to 15 minutes for Link Market Services to process the votes. So in the meantime, I'd ask our MD, Tom Cregan, to say a few words and then invite you as the shareholders to ask any questions that you may have. I think formal part of the meeting, I think we broke the record. It's 17 minutes. That's great.
A few words, and they are probably not statements that go together that well. Welcome everyone. I think we'll go through for the next kind of half an hour, if that's okay. Formal wrap up of our financial results for last year. Talk about our guidance for this year that's now in market, and then the PFS acquisition. We've done a lot of talking about that, and a lot of people have read the document, so I won't go through that deck page by page, or we would be here for a long time. So we'll hit the highlights, and then I'll take questions from there. Everyone will get bored of me talking about this slide, but you'll just have to bear with that because this is why we exist. And for those that attended EML Con yesterday and heard our customers in different markets talk to our investors, talk to our prospects, talk to our board, it just keeps ramming home that message that. Awesome is an American word, right? People look at awesome and they think it's cheesy as a word, but payments can be awesome because payments are normally boring. I mean, when people pay a bill, it's not normally the highlight of your day, in terms of excitement. What we do is we say internally that we put the awesome into payments because what is awesome for it's not about us. What is awesome is for our customers. So when one of our salary packaging customers can save dollars a month and get a fee-free product because they're using our loyalty program and getting access to discounts across several thousand merchants, for them that might be an awesome experience, right? I mean that it's a better product that's self-funding, and in fact kind of adds savings to them at the end of the day. For BillGo was at our meeting yesterday. For American consumers paying bills through a network of 8,000 banks, right? It's a very complicated, very expensive process. I think Mike, the CEO, yesterday said the average cost of paying a bill was somewhere from $5 to $25, right? In the US, when you can use us through our virtual accounts or virtual card products to pay a bill and it not cost you $5 to $25 per bill, those people would think that's pretty awesome, right? So that's our job. Instant and secure are just, that goes without saying when you're in the payments business. And our solutions connect our customers, being everything from gaming companies to salary packaging companies to retail malls to incentive marketing companies to their customers, and we don't deviate from that, from that strategy. To give you an idea, I think, Wade, are we good to go on the prezos? Wade, where is he? We good to go? They're not embedded? Okay. Well, I can't really play them, can I? I could act. We could get people to come and act. But this will be on our website later on today. But it'll give you an idea just of, from a customer-facing perspective, how easy it is in the salary packaging industry for someone to order a card, activate a card, and be transacting. And on the right side of the ledger there is really about our Pays technology and digital gifting through mobile devices. And again, that started life as a gift card, kind of initiative, the ability to, provide an instant gift card to people using a digital card embedded in the Pay. So Samsung Pay, Google Pay, Apple Pay, whatever the different wallets are. And for those again at EMLCon yesterday, you would have seen MoneyMe talking about launching a line of credit product, basically a revolving line of credit product through a digital card through the same means. So the Pays for us is both gift and GPR, and will be a pretty big part of our growth going forward. I don't look any skinnier than I did last year up there, which is a bit unfortunate. But yesterday was a phenomenal day, and credit to Rich and Mal and the Prodigy guys and everyone, all of our guest speakers who flew in from across the. We had one from Italy, we had one from the US, two from the US, I think, which was great. I mean, it's a really great day because it exemplifies that mission, way better than I could do it. And you see these people. Come to work, and you can just see their passion and their energy for what they're doing, and that's our business at the end of the day, right? I mean, we wake up in the morning, and we don't think, oh, where's our next deal? We wake up thinking we've got hundreds of customers like that who are looking for an edge in their local market vis-a-vis their competitors in that market, and they're looking for, how do I make payments? How do I use this? It could be an end-to-end solution, or it could be just part of the spectrum. How do I use that to get an edge in my local market? So, it could be a buy now, pay later company in Italy, which we launch kind of early next year, who are looking at, how can they use us to get acceptance through the retail, POS network for buy now, pay later. It's that creativity that will allow that program to happen. Once it's in market, then the next part of the business model comes to play, because their competitors look at a change in the competitive dynamic and they think, well, what do I do? Do I do nothing and just hope that this has no impact? Or do I also go and work, with EML and kind of neutralise that impact? Which is what happened here in Australian gaming. Ladbrokes, Bet365, I mean, it ultimately becomes, a product that they all have to have. So that's two parts of the business model that just drive our growth. And so, we're talking here about some programs and some, contracts that we've entered into. We're entering into these things all the time. They're not material enough to necessarily do, ASX announcements on. But, the team and the guys in biz development are constantly building pipeline, launching products, and they're all accretive at the end of the day. They're all working on the cost base that we have, and that again just drives future growth of the business. I'll flip back there. I mean, this will be kind of pretty obsolete slide in 90 days when hopefully PFS is part of the family. But for FY19, I think most people are familiar with the stats. I'll talk about the offices here on the right hand side. When you think about Europe and the Middle East, we've now got more offices, so we can add to that with PFS Malta, we can add to them. We can add another office in Ireland. We can add an office in London, which will be good for investors because they get to London, but they don't often get to Kansas City. So it's convenient that we have an office now in London. So there'll be several in there, and a big part of our plan for PFS is not to try to dislocate the company and look at how you can exit an office that might cost you 60 grand a year. I mean, big deal at the end of the day, right? I mean, I'd rather gain 60 grand in margin because we're selling and we're innovating than I am about saving 60 grand in rent. It just doesn't, come into our equation. So you'll see lots of offices there, but there are people in them, and they're working hard. And what we're not going to do is dislocate it and have people start thinking about, oh well, as EML acquires more businesses, what does this mean for me? What does this mean for my job? What does this mean for my, for my role? We're buying these companies for growth. They're growing at 30%. We're growing at 30%, and it's the alchemy of making a bigger business grow at 30% versus look for pennies on the floor. That's a time for a mature business in 5 years' time, but it's not time for now. In review, again, pretty familiar slides, but that will talk about why we grow year on year. I mean, our exit run rate is always the starting run rate for the next year, which is the beauty of the business. I mean, you have visibility to, given there's obviously parallels between GDV and revenue, you start the year with a fair degree of confidence of where your revenues are going to be, right? I mean, things happen. They haven't happened to us, knock on wood, but you can lose customers. There can be issues. Barring those type of things, your run rate really gives a good indication of what the revenue will be, during the year. And if you've got a mix of organic and inorganic, that's again what you want to see, right? I mean, you wouldn't want to see 100% inorganic growth because it would mean that your existing programs aren't growing. That's not what you want to see. You get a mix of both, is a good driver of the business. FY19 was obviously a big year. This year, our guidance is again kind of 29 to 40% up again in EBITDA, and then really the numbers change around completely in a kind of post PFS world. Look, again, just thinking about growth, in a short term to long term, kind of view, and we could put several things on that, on that list. Salary packaging is a growth driver. It was last year significantly. Will be this year with a Smart Group as they continue the kind of migration of programs onto the platform, and it probably is the year after that. Now, at the end of the day, if there's 350,000, 400,000, people who are using salary packaging services, and we end up with 300,000 of them, that tree doesn't grow to heaven. So it's not going to grow forever, and eventually you will end up with kind of terminal growth rates in that industry or in that vertical that grow in line with health spend, for example, because you're going to own most of that vertical. So you've always got to have new verticals and new products that are coming in that have 4 years, 5 years, 10 years of runway of growth, right? And they're not always easy to predict when they're going to come through, but that they're there. So when you think about American gaming, and Seth from PointsBet was there yesterday talking about just how complicated that landscape is. It will take time for that business to evolve, but it's a huge market. I mean, it's the biggest gambling market in the world. So whether it takes a year to kind of unfold, 2 years to unfold, 3 years to unfold, 10 years to unfold, we're still going to be here in 2, 3, 5, 10 years taking advantage of it. So we can be patient, and you can have drivers that are short term, and you can have things you're investing in that are long term markets. The vans bit in the middle there, Peter hates vans, so I think we probably will end up calling it virtual cards, I think, next year. But again, there was a presentation yesterday that talked about the size of the bill payment market in the US that had a T at the end of it. I mean, these are, so I won't put that slide up, but when you're in a market that has a T at the end of it for trillions of dollars running through it, a very small slither of $1 trillion market is a very nice place to be, and that's where we aim to be. P&L wise, again, I think everyone's pretty familiar with the results for last year. This 29.1 obviously includes the acquisition costs we had last year. In the PFS presentation, it excludes it because obviously we've got transaction costs in the PFS deal as well, so we wanted to have EBITDA that was kind of comparative. But a very positive year all up in terms of on all items: revenue, margin, growth, cash flow. So very positive there. From again steady margins, which you would expect to see because our margins have roughly been 75% for ever since I've been here. So kind of 8 years, because when you're getting these programs on board, they're 2, 5, 8 year contracts, and they're non-contestable and they're not repriced. So you're entering into a contract for 7 or 8 years. Now we don't often put inflationary increases in there, so we don't do that typically. But they're also not priced. So you would expect to see pricing stability, margin stability from programs that are put in, right? They're not being bid while you're not halfway through the program and they're being bid on, and there's kind of competitive tension in the pricing model. Income statement, I've got lots of slides here to get through. So and balance sheet, very basic, pretty vanilla. Balance sheet. It'll still be vanilla in a post PFS world, but a couple of things will change, and one of those is if you look at deposits, where is it there? Oh, it's on receivables. You can see to other institutions. We're the issuer of the product, so it's our money license that is the issuer. There will be $1 billion being issued by us and PFS collectively on our license when that deal closes. Off our license, so issuing banks licenses to issue the product, another 250, 300 million probably. So on a monthly basis, we look forward to interest rates rising because we'll be sitting on $1.5 billion of float. So at some point in time during my lifetime, interest rates will rise. That is something I feel confident about saying. From a segments point of view, again, restating last year's numbers, but the gift and incentive business continues to grow. It's grown beautifully again for us this year, organically and through the efforts of Flex that came on board right on June 28, so it didn't contribute to last year. And Nikki at the back there and her team at Perfect Card. The GPR business, really other than one customer going backwards, being Ludo was a positive with plenty of large wins in that space. Entry into the US market with PointsBet. And Vans was certainly a growing business. Someone said to me when they looked at that and they said, "Gee, that was a surprise result." I thought, well, we've been working on it for 4 years, so sooner or later, the numbers were going to be there, and then that business obviously doubled again, this year. Trading update. Just to talk about some of these programs that are coming on board that don't make the media and just don't individually won't make the media. So Corset is think about an Edge Loyalty. That's one of our gift and incentive partners in Australia, dealing with FMCG companies using our technology in the gift world. And again, for those there yesterday, Epipoli being a similar partner for us in Italy. Corset is that same company in the Netherlands. Clever Gift is that same company in Ireland, looking at how does it use digital pays for incentive programs. Jigsaw is the first one that we're working on where it's insurance claims payable through an instant program to your fund. So I'm an insurance assessor. Your house, you know, the TV's gone, the couch is gone. An assessor's in there. They're assessing that. Rather than that claim take 6 weeks, that person can text you, could text you your claim on the spot. Right? First program we've had of its kind, I think it's fair to say. And so we'll learn and we'll take our time to understand it. But obviously it's a big market in its own right. In the gifted incentive space, or in fact, I'll go to the GPR space. I mean, we talked last year, or we talked during the year about our solution now moving into the financial services space, for the provisions of loans per se, but other types of financial vehicles. Elfin Markets is a peer-to-peer lender that will be launching with us on the pays in a relatable sense. Moneybrain similar. ScalaPay it's an Italian buy now pay later entity. Paygo is the largest business to consumer GPR program in the Nordics. Supersport, which I think might be a few weeks away from launching, is our first gaming program in Croatia, and the parent group has multiple operations in different countries. Star Casino, which is our first program in Italy. I think Nikki is launched yesterday. So we're now in Italy with our first program there as well. So we are getting traction in these, in these verticals. And Viewpost is a new vans aggregator for us in the US. Our guidance for this year, which went out on Monday, and we'll work into that by looking at the Q1 trading update. GDP is obviously up a significant, right? So we started the end of the year, end of June, with I think a $900 million run rate of GDV, and so you can annualise that, and you can say that's going to be 12 billion. But clearly, gift and our mall business is seasonal, and so a lot of the GDV will come through in this quarter. So tracking well from a GDV point of view, tracking well from a revenue perspective, up $6 million, year on year on the same quarter. The revenue conversion is just a mix issue, right? I mean, you've got gift cards at 600 bips, and you've got reloadable at 120, and you've got vans at 10 to 15. So you end up just with a mix issue. Segment-wise, obviously gift, again growing pretty strongly for us. We do have the benefit of Flex being in those numbers, obviously, and the growth they're getting in the UAE and through their core kind of European markets. And the boys are at the back here from Flex, if anyone wants to. We still get to call you Flex, but not after this one, Neil and Craig. After that, you just email. Last time you'll ever be referred to as Flex. But you rebranded. We rebranded you here. But great business, great people. I mean, it's just a fantastic, group to have. On the relatable space, Q1's not the greatest quarter. There's not really much, driving kind of growth. We had some one-time things in last year's comparable quarter for card orders, and so if you added some of those things back, the growth rate is probably 6 to 7% or something, which needs a lot of improvement, right? I mean, there's a lot of work going into the pipeline on GPR, and there are programs that, like I just mentioned, that are due for kind of imminent launch, and we're pushing hard as we can in terms of getting programs to market to drive GPR up. The year number will be a better number than the 3% there for the quarter. And Vans is it's growing 200+%. So credit to Jamie, our US CEO, is also at the back there, and his team for what they're achieving there. Guidance. To put it in simple terms, 38.5 to 42.5 in EBITDA. Last year we guided for revenue, EBITDA, and cash flow conversion, so we're doing the same thing. And point 7 here is an accounting freebie that I just can't understand, but somehow luckily our auditors can understand it. But somehow a lease that I pay for that is in fact an expense is now an asset. And I don't quite understand that, but but it is what it is. And so companies that have leases will have their EBITDA inflated by the adoption of that accounting standard. And we will too, by about $1.5 million. We've got $1 million less that we're likely to earn in interest rates, just given market movements. But consensus was about 40.4 million, I think, within the analyst community. So, in a simple sense, if you look at the top end of that range of 42.5, and you add 1.5, which I'll call an accounting freebie, onto 40.4, you're going to get to the top end of that range, which meant that we were certainly tracking towards consensus. On the bottom end of the range, it just gives us a bit of flexibility for seasonality. I mean, at the end of the day, malls are still a seasonal product, and 50% of that volume is going to come in December. So Rob and I have often said we'd like to give guidance to people on Jan 1 because we would then know what those numbers were, but we've been told that's not possible. So we're doing that now. So obviously we have a flex in that in that range, but it's performing as we would expect it to perform. I won't go through that because they're no one can read that anyway. But when we get to the PFS opportunity, am I going for time? When I get to the PFS opportunity, I think Peter said at the start, transformational, and that word is overused, but I'm going to use it because it's actually right for this opportunity. Eric, who runs our M&A, kind of practice, is at the back there too. We look at a lot of businesses. We have a pretty strict criteria for what we look at, and most just don't come close to cutting it on all those criteria. But this one did, and it did in May when we started, working on it in earnest, and it does now, as well. It has significant scale, right? It's a very sizable business. It's got a different product portfolio to us, completely. It's very, very complementary. If it was the same business, I probably would have had less interest in it, frankly. Like if it looked like us, and it was us, same vertical, same business, and you were just buying for scale, and then you were going to, strip out costs as a means of kind of, getting the numbers, there would have been probably less interest. But it totally complementary in terms of channel, product, which really, was a real positive for us. Digital banking and consumer relatable are just things we're not in. Multi-currency cards are products we just didn't have. And so in all the other ones, in all the other acquisitions we've done, be it Flex or Perfect Card or the store financials back in the day, they were gift card businesses that we were bringing our technology to them. So we were bringing reloadable to that business, which is why on one of those earlier slides, the multiples come down so quickly, right? I mean, you're paying 10, 12, 13, 15x for some of these things, and 2 years later you paid 4 because you're bringing new revenue streams, new tech, new product to that business. This is the same, but it also works in reverse, right? So we'll be bringing digital pays and we'll be bringing products to them, but they will definitely be bringing, products to us. So as they grow within Europe, we'll be looking how do we take advantage of those same products in other markets, be it wherever they may be it Australia, be it North America, wherever. So that's a really exciting part of the business. And I'll just spend 5 minutes on it, and we can just kind of open up for questions. But the one that I think I went through yesterday that I thought was the most interesting one was Robert. Well, that was that one there. So that will talk to slide. I don't know what's his slide. It's 50 there, but we'll talk to the complementarity of the GDV, which will mirror the complementarity of the revenues as well. So 43% coming from open banking and or digital banking, I should say, and kind of business to consumer relatable products. Our GDV and revenue in EML today from that is 0. So that will talk to complementarity. Government, local authority, and NGOs. The revenue and the GDV for us wouldn't be 0, but it would be close to 0. Right, we have a very few small number of not-for-profit customers, and a couple of government contracts that every now and again can have volume through them, but by and large don't. Right, 42% of their business is that through the UN and through the UK government and the Finnish government and a bunch of other programs. So they've got scale of significance, right, coming through that segment. And the multi-currency travel cards, the revenue for us today is zero. So, other than the kind of incentive solutions, which are largely gift cards for three, and a company called Centrip, the rest of that business is that's the complementary nature of it, right? I mean, we just don't have revenues in those same verticals, and neither do they. So they don't have any gaming, zero. For example, salary packaging, which is a kind of an Aussie, an Aussie construct, if you like. For them that's zero. So when you overlay the two businesses, they're going to be pretty good businesses. The three down the bottom here, so they've obviously got key customers across those verticals, and in the bottom three, Avios is the frequent flyer program for what British Airways, Aer Lingus, Iberia, and Vueling. So everyone in this room, I would suspect, has a Qantas or Virgin card, and you flip it around, and it's a multi-currency travel card, which we can't support. We haven't built the technology to support that. They won that business. It was previously an Amex program. Mastercard won that program. Mastercard wanted all the volume, obviously, for their network, and used PFS as their tech partner to make that happen. Big brand, significant opportunity. Fintonic is another digital bank in Spain. Banchivo is a digital bank in Eastern Europe. So in the verticals that they're in, right, they're signing, they're winning, and they're launching. So they've got momentum as a business organically. We've got momentum as a business. And what you want to do when you marry them together is not mess that up. So let both companies grow as quickly as they can, and look to leverage each other's products, but without adding layers of kind of bureaucracy that take a 30% growth business to 10. Right? I mean, it's a flywheel, and it's about kind of keeping momentum up in those businesses. Noel Moran, where's Rob? What did he win yesterday, Rob? He won it again. So he won the European FinTech CEO of the Year yesterday, last night while we were at dinner, out of 122,000 applicants apparently, right? So the business is a real business, and the people running it are smart people, right? And that's the simple takeaway. They've been in the game, they've been in payments, and they've got subject matter expertise. And otherwise the business wouldn't have got to where it got to. From and I'll just go down to the last slide, which I think is, where are we? Apologies for skipping through here, but there we go. Is that one? So I think, as we think about pro forma financials for this year, pre-acquisition costs, which are going to be big. I mean, I think we flagged transaction costs to be in the realm of 17 million. So they're a sizable acquisition cost. But if you put those two businesses together in FY20, our current forecast and guidance, and theirs, which has been vetted not only by ourselves but by EY, by RBC, by ANZ, by a lot of different organisations, GDV would be about $18 billion. And that's a big number. I was about to drop the F-bomb there. I'm glad I pulled that back. That's a big number, and makes us one of the largest prepaid companies in the world. Now I don't know where it ranks us, but it's up there. From a revenue basis, revenue would be 208 million. Take EML standalone FY19 of 97 to 208, right, on a kind of comparative basis. Revenue growth rates are really similar. EBITDA would be, you know, EML standalone FY19 29.1 or 29.7 if you backed out the transaction cost, to 65 as a, you know, as a combined business, at the same kind of EBITDA margins. So the bottom line for us is, you know, very complementary business, but it adds pretty significant heft. So when we start looking at our business in FY21, FY22, again, your growth rate is off a higher base. You know, therefore you know, that's the kind of inherent scalability of the business. So we're really excited by that. You know, obviously as the deal closes and we work with the Irish regulator and the English regulator to get the approval for the deal to close, which could be 90 days, it could be longer than that. It is a process, so we'll keep everyone updated. But I think as we enter FY21, you know, FY21 will be you know, I hate the word, but a transformational year for us as well. And with that, I'll probably pull it to a close and just take questions or any questions to the board.
Tom, I just noticed the presentation yesterday, the PFS margin is about 60 odd percent versus AML, which is about 75%. Can you give us some colour around that differential and how you see that playing out?
Yep. There's a couple of factors that will differ. So they have no breakage in their revenue stream. So when we do, because we're a gift card business, and obviously breakage is 100% margin, so that will lift your gross margins, right, into that 70s. They also have costs that they're paying out that we don't incur. So, you know, for example, they're paying, well, last year was 2.8 million sterling, and it will grow as their business grows. So, you know, 2.8 would obviously be in the threes for processing. So they pay I'd say almost to someone like us, but someone who's just a pure processor, to do some of their payments for them. So if you take that, if you took £3 million out of their cost base, you know, their margin would increase, you know, several points. And then for the UK government business, which is again a pretty significant volume of business, if a cardholder wants to do a real-time payment from that, so if I'm a UK government cardholder and I'm receiving assistance of whatever kind it is, right, from the local councils, if I wanted to send money to Peter, in order to do that in real time, they have to access, you know, what's called the real-time settlement network, right? So they've got to be a member of that. Right now, they're not a member, so they pay another company to act as the intermediary between me and Peter as that volume flows. Cost them 25 pence a transaction, right? And that they are in the midst of an integration to become a primary member of that network, if you like, which I think is slated for the back half of this fin year. You know, it goes to 2 pence, right? So you're talking about £400,000 or £500,000 just disappearing. So that would be the difference. It's got an input cost and then breakage, which for them is zero. Yeah.
Do you feel your market that you're going for is the millennials?
I think we go for lots of different markets. I mean, our market is just businesses that are involved in those different markets. So I don't think, you know, we are particularly targeting millennials more than we are, you know, nurses who work in a public health system, or customers that are gaming customers. I mean, our verticals are pretty broad. Those companies will be targeting millennials. So when you think about digital banks particularly, that's their core constituent is millennials who are disaffected with major banks and are looking for just better user experience. So the Rebellions, the Revoluts, the Monzos, I mean, all these companies that have grown, they are targeting millennials. You know, we're just targeting them. So, you know, who the customer is at the end is really their business. Our challenge is how do we help our tech make that connection better, you know, to their customer. But yeah, whether it be millennials or whether it be, you know, as I said, there's a whole raft of segments in there.
I know this is an Irish firm. Stepping back a bit, the UK has been a graveyard for
very, I think, is the bottom line, because I think we've already done it. I think that it's one of the competencies of the company. I mean, I think that a lot of I can't speak to those other companies, but I think M&A is a process you can get horribly wrong, and I think in the case of the banks, they probably wanted, presence in those markets. In the case of Slater and Gordon, obviously, when you have $1.2 billion of work in progress on your balance sheet, and the $1.2 billion is then restated to zero, something's gone wrong, right? So I think they're different examples, but for us, we're buying companies that we know, really well. I mean, we're payments people, so when I look around the room at the back there, they're people I've worked with for 10 or 15 years, but that is their expertise. So when we look at a PFS, whether that company was in the UK or Ireland or wherever, you know what you're looking for because you're running the same business, day on day. So you know where to zero in, you know where the skeletons will be buried, you know what to look for, and so part of it is just DD, and part of it is taking your time. So I think with the EML Newcastle team, Neil, I was talking to their former owners for 2 years, right, in terms of the logic of a tie-up between the business. So you get to know the character of the people you're buying it from, frankly. You get to know the character of the people you're going to be working with. That's a huge, in our world, is a huge thing, because when we're buying a business in Sweden, I'm not Swedish, I don't speak the language, I don't understand the culture. So you're buying a business from someone who does, and you need them to be part of the go forward. If you just bought it and those people left, then you're struggling, because then you're thinking, well, hang on, what do I do now? Who do I go and hire? Who do I put in? So we take our time on these deals so that we know the people we're buying it from, as cliched as this will sound, are satisfied with the journey satisfied with the journey they've already had, but want to be part of another journey, right? If they just want the cash, that plays into our mind. Is that the kind of business that you want to have? So, Nikki is a former CEO, Neil is a former CEO, John is not here, but is our CEO in the Nordics. Noel and Lee, who are staying. That's a big part of the discussion through the process is, the people and keeping those guys. And maybe that's easier for us to do because they're smaller companies. You've got 100 and you're not buying a Clydesdale bank and it's got 30,000 employees and a bunch of complexity. So I think that, I think we're good at it, and I think we're good at integrating them, and I think we're really good at cultural fit. Spend time with the team, and the board spends time with the team. Last night, these are guys we've worked with for what, 4 months, 5 months. It feels like we've worked with them for years. So you get the people right, the rest will flow, I reckon.
Congratulations on what you've achieved to date. It's been phenomenal. The gaming business with the Bet365 cards, that doesn't seem to have achieved its potential.
In the UK or in
Australia and around the world. Am I right in that assumption, and when will that materialise?
Yeah, I think, in Australia it's it's a pretty solid part of the business. It'll be, 600 million plus in debit volume. So, Australia, I think we have scaled. Last year it was 7% of revenues. This year it'd be less because we've added inorganic revenues, and I think post the PFS deal, it's low single digit, kind of revenue. So growing and important, but it'll be a smaller part of the business. The gaming companies are selling to them is like capturing lightning in a bottle, right? So if you can imagine. You're selling to a Bet365, and we're in the UK. It's our Bet365 UK is probably a quarter of our Aussie business. Is that fair to say? Something like that. So one program in the UK is a quarter of our total Aussie volumes. We have approved, I think, memory serves, something like 9 markets in Europe that are already approved through the regulator and approved through MasterCard. All of their regulated countries. Same with some other guys. Then the US opens, you know, and you know, all frame of reference moves to the US. Every single effort, you know, that they have goes into the US. So you're going to wait for that lightning to strike back, and for them to say, okay, well now I want to launch in Spain, I want to launch in Italy, and so on. And competitive tension helps that, right? So if you've now got a program in Italy that's launched that is a competitor, you know, to 365, now they have a different rationale for moving or not moving, right? If there's no competitive tension, if there's no programs being launched, then they can be reactive if they want to be. You know, I think our European gaming business will grow this year in terms of programs launching and new programs coming on stream. Aussie is where it is. I mean, we've got the companies, so we grow as they grow. The US, I think there is a lot of opportunity there. The guy from PointsBet ruined a year of my life yesterday, because I've been at pains to tell investors that it will take a long time for that market to unfold. And he came out and said it's the greatest opportunity in the greatest market, the biggest gambling market in the world. Get on. So he blew a year of me keeping a lid on the US, but that is really difficult to predict next year, and the year after. But 5 years hence, I don't have any issue with it, right? I mean, you look at PointsBet with 10 market access agreements. Bet365 will be in that. You know, they'll be a player. I mean, when you're making 500 million a year in, you know, sterling after tax, you know, you got the money to play in those markets, and we're selling to other guys as well. And so, you know, in 3-4 years' time, I got no doubt we'll have plenty of programs there. All that being said, I didn't want us to be a gaming-related business. I mean, the whole story of this company is diversification. I don't like waking up in the morning and seeing, you know, and this happens now, you know, UK government to you know, regulate some part of the gaming industry, right? And you wake up and your stock drops 5%, because no one knows what it means, but all they know is, oh, EML, don't they do gaming? I think they do gaming in the UK. Oh, let's sell, right? Gaming is a noisy market. I mean, every single day you're hearing different regulatory changes, different competitive changes, very noisy. We're just a provider to that industry, but we're not a gaming stock, you know. So we never wanted ourselves to be disproportionately, you know, skewed towards that segment, no more so than any other segment. So we'll continue to grow. It'll continue to develop this year, but you know, I'm glad it'll be single-digit revenues, not 20, frankly.
Well, I have another one. Has the board given any consideration to when dividends might be payable?
They were about to, but not anymore. So, yeah, gone. So we were looking at that, and we'd said that we do have a lot of cash, so we were obviously looking at what the options were there. With this deal and the debt structure that we've got, and the headway that we've got in that facility, I think what you'll see is we'll funnel cash flows to debt, and we'll redraw on that debt for you know, for other M&A opportunities as they pop up. So dividends won't be something that the board will have to worry about for a while. Not for a year anyway. That's all good. Pete, do you want to close? Will you close?
Yeah, thanks very much for attending, and thanks. We should, you know, give Tom and the management team a round of applause, because it really has been an unbelievable effort. I can't talk too highly about the quality of the team, and Tom's led the team. A lot of the people are people he's met and worked with for 15 years in the various markets around the world. That's why it isn't going to fail in the UK and Europe, because these guys know the people, they're high quality, they know the industry. We don't take big risks. We do a lot of homework, and you know, that acquisition, it's hard to overestimate the amount of work that went into that. It was huge. These guys were working 24/7. We had legal teams in the UK, accounting, big four accounting firms, and we do most of the due diligence ourselves, but we get other inputs in. So I think any deal can fail or can hit an air pocket, but I would say it's highly unlikely that anything more than an air pocket would occur with these transactions. But there's always a chance that something comes out of the blue and sets you back a bit. But we've also got a lot of workout skills in the business. So, in the case of this new acquisition, just a couple of things I think we should say is we will be putting in our own compliance people and lifting, if you like, the industrial quality of compliance, because private companies they don't run themselves quite like listed public companies. And also the finance function. They're the two areas where Tom and the guys will be putting in resources in the first instance, because we've got to get that side of their business up to industrial strength. I mean, it's running fine, but it's not where we would want it as a global business. So I think you'll see in a year or so those businesses really kick on for us. So anyway, that's just my comment on the meeting. And thanks very much for attending, and hopefully, I think next year is going to be another big, very big year for EML. Thank you. Sorry. Oh yes, the poll results. Sorry, Paul.
Unless there was a big hidden protest vote in there, I think they were all looking all right.
Yeah, I think they're all looking okay.
That's the final results. Just there. The final columns.
Okay, look, I won't go through all the fors and againsts and abstentions, but all the resolutions were carried very, very comfortably. So I think that's all I really need to say, and these will be put up on the ASX. The results will be put up on the ASX, so thank you very much.